Well, welcome back once again. Straight to the top story this evening. The Reserve Bank of India has announced an interim dividend of 28,000 crore rupees to the government after post-budget meeting with the finance minister. Now, earlier today, this transfer is for half the year ending December 31st, 2018. Now, the total surplus transfer to the government stands now at a total of 68,000 crore rupees for 2018-19. This is the highest dividend ever paid by the RBI to the government. Sapna Das is here with all the details. Sapna, big numbers these. Help us crunch these numbers. What sense are you getting from these numbers? 28,000 crore rupees being the latest installment. Sapna.
Clearly, this was a demand by the central government in terms of the interim surplus amount, 28,000 crores. The total target that they were looking for FY19 is 68,000 crores, out of which 40 obviously had been given earlier. And the remaining interim surplus has now come in. This 28,000 crores should be adjusted again by Reserve Bank of India when they close their accounts next year. So this practice of interim, transfer of interim dividends or interim surplus by RBI has started. This is the second successive year. But having said that, the point to watch out for would be the Jalan Committee recommendations, which are due sometime in April. That will suggest a new ECF formula. So will the practice of interim dividends continue from RBI post that as well? As of now, what we are given to understand is that FY20, the government has factored in 68 to 69 odd thousand crores as total dividend from RBI.
Right, Sapna, thanks a lot for that. So the Jalan Committee report will be, of course, a key trigger that the street will be watching for. And speaking of the street, well, Latha Venkatesh is here with more on the RBI dividend. Latha, 68,000 crore rupees for FY19. What do you make of it, and how will the bond markets react to this?
The dividend of 28,000 crore is entirely on expected lines after cnbc itself broke that story on February 5th, and since then it has been repeated ad nauseum. So no shocks at all to the market. The math is as follows. In the Rajan years, that is pre-demonetization, on an average, Reserve Bank surplus was between 60 and 65,000 crores. That is the dividend it was giving. Demo year and the year after, the dividend reduced. In demonetization year, it was obviously because the Reserve Bank had to print money and it had to absorb a lot of liquidity by paying an interest of 5.75%, and therefore the dividend was less. This being a normal year, one should expect a dividend of about 65,000 crores. The Reserve Bank has already given 40,000 crore as final dividend last year. That was given in July. So to that 40,000 crore, if you add this interim of 28, it is coming to 68,000 crore. So it would look like a normal dividend. There are critics who say that the interim dividend is last year was 10,000 crore, this time 28,000 crore. So the government is arm twisting more from the Reserve Bank. But really, if you do the math, it is entirely on previous lines. It's only a little bit more than the previous average. We have to see the dividend next year. The government has estimated in the budget 83,000 crores, almost 82,900 crore. So it is obviously factoring in something from the Bimal Jalan Committee. But as of now, there is no surprise in this dividend. Last year's, FY18, FY17 dividend has not been handed over by the Reserve Bank. So really, this is a no surprises news.
I believe this surplus is coming only from realized accounts, not unrealized reserves. So if the realized profit and they are following the pattern of last year and the paying year, and after the board is satisfied, I think technically it is there is no issue. But the major issue which is we are waiting for Jalan Committee report. In case Jalan Committee identifies there is some excess which is sitting and it has to be distributed, it has to be kept in a dividend distribution pool, which should be used for smoothing the flow to the government over the years, not in 1 year.
There are two elements of arm twisting here. One is the money is not due right now. The money would have been due actually in August when the regular dividend is paid. So both last year as well as this year, effectively there's been an advance paid by the RBI, which is kind of unprecedented and hasn't been seen in the past. Now, two is, I think, in the Urjit Patel years, for 2 years in a row, we actually saw the RBI holding back some of their retained earnings and embellishing their contingency fund, I think by 13,000 and 14,000 crores respectively. In a sense, that money has been taken back.
Right, so the largest ever dividend payout, but as Lata tells us, it's pretty much in line with the trend that we have seen over the last few fiscals, so not much of alarm bells there. Let's shift focus now into stock-specific action. The Anil Ambani-led Reliance Group companies saw a relief rally in today's trade. This after the group reached an in-principle standstill pact with over 90% of its lenders. The lenders have agreed that they will not sell any of the shares pledged by the promoters till the 30th of September. And well, in fact, this is the second such deal in recent times following a similar arrangement between Z promoters and its lenders. However, promoters borrowing from the mutual fund industry has come under public scrutiny in light of fall in shares that are often pledged as collateral for such loans. Now, SBI's chairman Rajneesh Kumar has spoken out against promoters pledging their shares for loans and has called it a bad idea. He goes on to say that it is not the right business model. Take a look.
I think the promoters pledging their equity, I think that is something which needs to be watched on, and it is not the right business model. Because if you have pledged your equity, it means that your stake in the enterprise must be deducted to that extent. Then your net equity has to be determined. So that is something a debatable issue, but over leveraging your own equity, I don't think it is a very good idea. Any sector, it is not untouchable for the banks, but the quality, banks or NBFCs themselves will have to be very mindful of this fact that the quality is not compromised.
Right, so bad idea, that the word coming in from the SBI. But on the same lines, we spoke to Bala Subramanian of Aditya Birla Sun Pharma AMC and VS Rangan, Executive Director of HDFC Bank. Let's listen into what they had to say.
When the rating is being done, the value, there is some bit of the importance being given for the underlying value of the company. As long as the underlying value of the company is reasonably good, against which I think the promoters funding has been done, then it can have some kind of say on the overall rating process.
Those entities which are predominantly retail in nature, they would continue to get access to the money. Of course, specific entities and this thing will have certain issues depending on their own balance sheets. Second part, where the assets are predominantly wholesale assets, either it is real estate or it is LAS or any other kinds of assets. Obviously, the availability will depend upon the quality of the assets they are running and how the lender is looking at it. And of course, the pricing for those kinds of risk would obviously be, higher than compared to the retail assets which are there for the housing finance companies and others.
So new developments in the 5,600 crore rupee National Spot Exchange case. CNBC TV 18 has accessed a report by the Serious Fraud Investigation Office, or the SFIO, that accuses 148 brokers for acting in concert with the now defunct Commodity Spot Exchange. This report claims that brokers played an important role in defrauding clients for their own benefit. Yash Jain is here with more details. Yash, a damning report to say the least as far as the brokers are concerned. Can you take us through the details and the response that has been coming in from the brokers who have been accused by the SFIO report?
Well, absolutely. But before I begin, let me make it very clear that the Serious Fraud Investigation Office just end of last week filed a winding up petition against IBMA, which is essentially one of the brokers in the NSCL transaction. And as a part of that winding up petition, a subsection was also given where SFIO wrote about its investigation when it comes to various brokers, other brokers which were involved in the NSCL transaction. And to be precise, of course, 148 brokers were named by SFIO in this particular report, having a client base of about 13,000 clients or investors, and a total exposure for all these brokerages was mentioned as 1,600 crore rupees. Now, some of the prominent brokerages were named in this SFIO report, including Anand Rathi, Geofin Comtrade, IIFL Commodities, Motilal Oswal, GM Financial, as well as Phillip Commodities. And when we talk about the headline allegations, some very daunting allegations being posed by SFIO against these brokerages. To start with, SFIO has said that these brokerages compromise the position of trust by making false assurances to all the clients or investors. They've also said that these brokerages missold products, promised a refund of money if the buy order executed is not honored by the other party. Also going on to say that these brokerages assured fixed returns and said that there would be absolutely no loss when it comes to transactions on NSCL. To be very specific, there is one point which SFIO has made, and they say that these brokerages also modified the unique client code. Essentially, the unique client code is distinct for every client or every investor who trades on NSCL. And what these brokerages, according to SFIO, did was they executed trades on behalf of investors on their client codes without their knowledge, and then of course these trades were transferred and re-transferred to other client codes just to shore up volumes on NSCL and so forth. Now, as far as the end conclusion is concerned, SFIO also has asked SEBI to look into the matter and pronounce all these 148 brokerages as not fit and proper to carry out their operations. But of course, a final report from SFIO is expected within the next 6 months as far as this particular entire NSCL transaction or the whole case is concerned.
Right, Yash, stay with us, but from what we understand, it's quite an elaborate report. Can you also take us through the specific allegations and the charges that have been slapped on these brokers, courtesy of the SFIO report? And come this report, what are the implications on the narrative that has been forwarded by Jignesh Shah? Just this afternoon, we had a press conference where he said that his stand has been vindicated. So again, one, the charges, and two, the implications for Jignesh Shah.
Correct. So to start with the charges, of course, some specific brokerages named in the particular report and very pointed charges being put forth by SFIO. To start with, about Anand Rathi Commodities, which is one of the brokerage, they've said that the brokerage indulged in a business model which is called the fund-based business model, which is prohibited or restricted as far as the regulations are concerned. Brokerages are only allowed to enter in a fee-based business. Talking about Geofin Comtrade, there they have said that Geofin had a NBFC subsidiary called Geofin Credits, where loans were taken from this particular NBFC in the name of clients without the knowledge of these clients. Of course, these loans which were taken in the name were again reinvested as far as NSCL is concerned, with the sole intention of shoring up the volumes as far as the exchange is concerned. So of course, a very something which was done out of consent when it comes to these clients who traded on NSCL. Talking about other brokerages, IIFL, very interesting point here made by SFIO. They've said that they appointed DCB as an agent for their brokerage, which essentially lured their account holders to get registered with IIFL and trade on NSCL without giving them proper knowledge about the risk, about the reward, and about all the transaction norms as far as NSCL is concerned. About Motilal Oswal also, they've come out and said that Motilal Oswal wrote off certain claims which they were going to get from NSCL. Now, these claims were then adjusted against some of the profits which Motilal Oswal made in the subsequent years. What this particular step did was it reduced the profits for Motilal Oswal, but on the other hand also it reduced the tax liability which the brokerages had to face. All in all, of course, very daunting allegations against all these brokers. As I said, a final report will be submitted by SFIO within the next 6 months, but the biggest point is that they've also involved SEBI in this entire investigation and have asked SEBI to investigate into this matter and really pronounce all these 148 brokerages as not fit and proper to carry out their operations.
Right, Yash, thanks a lot for that comprehensive take on the SFI report and what it means going forward. And now, staying with that story, the founder of the controversial National Spot Exchange, Jignesh Shah, has announced that he will file a case against the former Finance Minister, P. Chidambaram, and 2 bureaucrats. He's blaming them for taking what he terms as malified actions against his company.
Regulator didn't act. Despite having everything, they didn't act. My question to Ramesh Abhishek is that why, when on 4th August meeting, and 6th August, when every defaulter has admitted to him, which SFIO report is confirming that liability is of a defaulter. EOW is confirming that liability is of defaulter. EOW is just said the money trail is to defaulter. When everything has been to defaulter, defaulter admitted in front of him, in front of the whole open public forum, and on 6th August there was an additional power given to FMC to attach the assets of the defaulter. Why no action? It confirms that when it was to this one, liability of the defaulter, and regulator were to take action, why he has not taken action?
days after the brutal Pulwama terrorist attack, which left 40 CRPF personnel dead. 3 Jaish-e-Mohammed militants have been neutralized by the army. Reports suggest that one of these terrorists is the mastermind of the attack. 4 army personnel, including a major, have also been martyred. The army earlier launched a coordinated search operation last night, and an encounter was triggered after the terrorists opened fire. My colleague Mufti Isla, who's been tracking the developments on the ground, is with us. Mufti, what's the latest?
Well, this was an encounter which lasted for around 18 hours, and it was extremely tough, dangerous and difficult for the security forces, given that they took a lot of casualties. 4 army men, including a major, killed. Then you had also a cop who died in the dying moments of this encounter. And apart from that, big names like DIG South Kashmir, Mr. Amit Kumar, as well as Brigadier Harbir Singh, who is commander of 12th sector, also getting injured. And there was also an SOG officer who was injured. Now all of them have been taken to the hospital where doctors are attending to him. But, the security forces will take heart in the sense that they also were able to eliminate one of the top militants named Kamran, who was wanted and a co-conspirator of the Thursday attack, which left some 30 CRPF men killed at Letpora. In the words of Inspector General of Police SP Pani, this was a very tough operation because these militants were skilled. They held onto their positions and exhausted their ammunition very carefully, and that's why it took long time, some 18 hours, really to eliminate all 3 militants. The other militant was a local, Hilal Ahmed, who lives in Pinglana. Identity of the third is yet to be ascertained, but clearly it was a tough day for the security forces in eliminating these militants. But then, it was a bad day for the security forces. But we've seen in the past security forces really been successful in eliminating. Only in 2018 we've seen they've been successful in taking down 250 militants, and in the last 2 years more than 400 militants. But over the last 2 years we haven't seen a tough encounter like the one which took place today. In Srinagar, this is Mufti Isla.
Right, Mufti, thanks a lot for that. Now, amidst fresh tensions between Pakistan and India post the Pulwama terror attack, the International Court of Justice has started a public hearing of the Kulbhushan Jadhav case. Now, remember, the ICJ had restrained Pakistan from executing Jadhav until this case was heard further. Jadhav, a former Indian Navy officer, was arrested by Pakistan in the year 2016 over allegations of espionage and abetting terror, which India called farcical. Now, arguing India's case at Hague is Harish Salve. He said that the Pakistan does not have proof necessarily required and not followed due process and has violated the Vienna Convention by denying consular access to Jadhav. Well, the big political headline coming up ahead of the 2019 Lok Sabha elections. The BJP and the Shiv Sena have finally sealed the alliance deal in Maharashtra. According to the new pact, the BJP will contest 25 Lok Sabha seats, while Shiv Sena will fight from 23 constituencies. The decision on the pre-poll alliance was finalized at a meeting between the BJP chief Amit Shah and Shiv Sena chief Uddhav Thackeray in Mumbai this evening.
भारतीय जनता पार्टी और शिवसेना के करोड़ों कार्यकर्ताओं के मन की इच्छा की पूर्ति हो रही। सभी कार्यकर्ता चाहते थे कि सेना और भाजपा एक युति बनाकर लड़े और केंद्र में और महाराष्ट्र में फिर से सेना भाजपा युति एनडीए की सरकार।
Well, with that, it's a wrap on this edition of What's Hot. Thank you so much for watching. But up next, Nifty and Sensex lost close to 1%, with the Nifty falling below the 10,700 mark and the Sensex falling below the 36,000 mark. Markets today, Talk Back takes all the action forward.